as we move towards 2023, 2024, 2025, there should be sustained copper price increase associated to the new production, new projects that are going to be needed. Do you see a supply gap that will become sizable by 2030?
We still haven't seen many projects being funded by sort of alternative sources of capital. So not by the majors, but we do expect to see that happening.
Still, I think it proves that still, if you challenge the current geological modeling setup, you can actually find new greenfield projects.
We see now that lithium and green hydrogen are becoming very important metals or gas that can be developed here in Chile. And they are very connected with copper on the EV and on decarbonization.
Welcome to viewers catching up on our panel discussion focusing on copper as part of One-to-One Mining Investment Americas. Of all the investor discussions that we've been hosting this year, in fact, I can't think of anyone who's not been bullish on copper. The energy transition will certainly be built with copper as its backbone. However, the challenges to meet the global demand and bring supply online are very real, and we're going to be hearing all about some of these challenges and some of the nuances within the industry from executive management teams, copper companies, and investors, of course. So introducing our panel, I have with me Luis Albano Tondo, CEO of Marimaca Copper Corp, Marcelo Awad, Executive Director of Wealth Minerals and previously with other copper major companies like Coldeco and Antofagasta, and Francisco Baresi, Investment Manager at Resource Capital Funds. And taking us through anchoring this discussion, we're going to have Francisco Acuna, who's Senior Consultant for the Base and Battery Metals segment at CRU. So Francisco, thanks very much for leading on this, and I'll hand over to you.
Hi, Adam. Thanks for the introduction, and appreciate for the invitation to be part of this panel. So I will start with a quick presentation about some trends in the copper market, and from this we can start the discussion with the rest of this very interesting panel. So if you can just confirm that you can see my screen.
I do.
Yeah, that's good feed. Yeah.
Okay, perfect. So a couple topics that I will be covering today. We're going to go over very quickly on what's been happening with the copper price lately. I think everybody watching this is pretty aware of it, but just a quick overview is always good. Then since our focus is in the Americas for this event, we're going to look a little bit on US fiscal policy and the impact it could have on the copper market. Then the impact of green economy, what is going on with the mine supply and new projects, and finally some trends related to emissions, as which has been in the spotlight of all the ESG considerations. So very quickly, again, being in this sort of a bull market or a price rally actually for copper in the last year or so. So this came as a result of, I will say, a combination of a perfect storm that allowed for the copper price to pick up to where we are right now. So on one hand, right at the aftermath of the COVID-19 pandemic, we saw a rapid recovery in Chinese demand, which came also in hand with the SRB, which is the State Reserve Bureau in China, that started to importing a lot of copper cathodes. So that created an over demand of actual copper into the country. At the same time, most countries came with monetary and fiscal stimulus to improve the economy after the pandemic, a dollar weakness, issues with COVID in terms of disruptions in mine sites and projects, also exchange stocks, multi-year lows. So there was actually a lack of material in the market. And finally, with all the green economy trend, long positions from investors, which we haven't seen in the past being so strong, both in the West and East, in China particularly. So all of this made the copper price jump to where we are. So obviously, everybody's very excited about it. There's a lot of long-term fundamentals that will support this, and we're going to go through a little bit of those. But I think just to understand that rather than a super cycle, we see this, or at least CRU's view is that we're not necessarily in a super cycle, but we've been in a situation where there was this perfect storm of fundamentals and financial aspects that made copper go where we are right now. However, the view is still positive, and we'll see if we are able to see a real fundamental shift in the next couple of years that might get us into a new super cycle. And EVs and the green economy is key for that to happen. So very quickly now in the US fiscal policy. So there's been a lot of discussion about the American job plan and the impact that that could have. So it's a $2.3 trillion infrastructure expenditure over the next 5 to 8 years. Now, what this means, obviously, is being in discussion, and this is actually coming in the back of the America Rescue Plan, which already put $1.1 trillion into the American economy, which had a direct impact in our forecast of GDP growth for the US. So that's already a good scenario. We estimate a 6.5 GDP growth in the US this year for 2021. And on top of that, we have this American job plan that will have a direct impact in infrastructure. Now, as you see in this graph, we sort of, when you start looking at the detail of the what this plan entails, in terms of metal consumption, we estimate that this could generate around over 100,000 tons a year of copper consumption, particularly in the sectors that are highlighted in red. And for copper specifically, EVs, water, and power grid are the main sources. So we are talking potentially just additional over 100,000 tons a year of copper only for infrastructure spend as part of this program. So obviously something that has investors with their eyes open on what would happen with this. And we are still yet to see where this bill actually goes, but very aggressive infrastructure plan that we haven't seen in years. I mentioned already about the impact of EVs. I want to highlight very quickly how resilient the EV market was during the pandemic. As you see in the graph here on the right, obviously there was a huge impact in the automotive industry in terms of total sales of light-duty vehicles. However, that didn't really have an impact in the growth rate of EVs, which is highlighted in the light blue dotted line. So EVs continue to have very strong performance, even during and across the pandemic situation. So that's obviously very positive. And on top of that, China is being very aggressive in their penetration targets by 2025, on top of the pledge of being carbon neutral in 2060. So monetary incentives are being in place in China. So we are very optimistic in China's consumption of EVs. Europe as well has been very aggressive in terms of subsidies to buy EVs, and the car manufacturers, the OEMs, have been very active in getting new models available, creating capacity, and so on. And maybe the big opportunity is also in the US, where at least we are very conservative about the penetrations of electric vehicles. However, this can have a shift if with the so-called Green New Deal that could boost the EVs transition in the US, and overall consumer trends basically that are changing, and actually people wanting to get more and more into EVs. And also there is an impact in terms of technology development that is moving very fast in decreasing cost of batteries, and with this potentially improving the penetration of EVs. So long story short, if any risk we see, it's probably on the upside for EVs. So obviously this is an interesting story for copper, because as you know, a fully battery electric vehicle consumes 4 times the amount of copper than a regular petrol car. So to put this into perspective as well, particularly for copper, how we see this in the left, we have the global refined copper consumption forecast. The light blue will be a scenario of that there's no electric vehicles or renewables. And in dark blue, what is the total actual forecasted demand, including EVs and renewables. So the story here is that basically from 2025 onwards, most of the boost in consumption will come from EVs. Okay, so to keep that in mind, that EVs will drive the increasing demand of copper in the coming years. But even though that's there is a key aspect of EVs and renewables, still nowadays it's a relatively small market within the copper market, right? So in 2020, we estimated that 1.4 million tons of refined copper were going to EVs. And as you see, the complete market is around 22 million. So it's still a small fraction of it. However, by 2030, we're seeing that it's going to be more significant, and this will continue growing. Similarly, in terms of renewables, in this case, particularly focusing on wind and solar, there will be an increase as well, and going from around 0.5 million tons to over 1.3 million tons in 2030. So two key markets that not only are going to require more copper, but also incentivize new type of investors as well. Because, and we're getting this question more and more in really understanding what is the role of copper in the green transition. And actually, we're still even looking at even greener scenarios, as we see here in this line, where if all the fiscal stimulus and everything goes even better than we anticipate in our base case, we can be in a scenario where even over 4.3 billion tons of copper will be required just for EVs and the infrastructure for 2030. So again, the scenario is to the uptrend rather than really seeing a downturn risk for EVs. Now very quickly moving into supply. So where's all that copper going to come from? And I think that's sort of the main question that we're going to be discussing as well afterwards with the panel. We see on the left the global copper mine production year-to-year growth. So in 2020 we saw a major downturn, obviously because of the issues that happened with COVID, with the operation that have to close, particularly in Peru, was probably the country most affected in terms of disruption and closures. Some projects were delayed as well. However, we see that for the next 2-3 years, we'll have an increase in global mine production driven by both recovering of mine production from existing mines that had to change their mine plans after the pandemic, and also big projects coming online, such as Spence, QB2, and others that we're going to see in the next slide. So we are pretty optimistic in terms of supply for in the short term. But then by 2025, we already will see that we won't have much growth. So we will have to start thinking about new production, new projects. And that is something that is shown as well on the right in terms of what will be the mine supply gap that will require new projects. So we see here both existing mine and firm projects. By firm projects means that projects are already being built, they are in construction stage, fully permitted and financed. And we see that by 2030, a 4.7 million ton gap, by 2035, 8.4 million ton gap. There are projects in the pipeline, but this highlights the necessity basically for new projects. And if we go back to the sort of demand discussion I was having in the last slide, if we are in a greener scenario where maybe 1 million ton extra of copper is going to be required, it can make a significant impact in what will happen with supply. So as I was saying, in terms of projects, this graph we have large projects with a capacity of 50,000 tons a year of copper. We have, as I said before, big projects coming in the next couple of years, 2022, 2023, namely Teniente Nuevo Nivel Mina, but also QB2, Camoa, Quellaveco, and so on. So interesting project. However, as you move 2024 and 25 onwards, you don't see more of these huge projects coming online, or at least in a firm stage. And therefore, there is an opportunity for the different projects that are in the pipeline, both large projects, but also more medium-sized projects as well. I want to do a quick highlight in South America because we will be having a bit of a discussion on that with the panel. Is particularly what is going on in South America for the next 5 years. Particularly the trend we see, and particularly with Chile, is that most of the projects or the firm production that we see coming from Chile is going to come from brownfield projects. So a bit of a lack of greenfield. There's two ways of seeing this. On one hand, less risky maybe than Peru, in the sense that Peru will have most of the projects capacity coming from greenfield, which we know that greenfield projects usually have more issues to come online. So that could mean that could be some delays. Brazil is a bit more balanced, but in terms of volume, obviously Chile and Peru takes most of the pie, and in that sense, it's interesting to see there is a lack of greenfield projects in Chile. So something that probably we'll have a discussion as well during the panel. Another aspect to comment on what is happening also in terms of supply and financing is the role of China in the last years. Well, actually in the last decades, but it's being exacerbated in the last years of Chinese state-owned companies investing in copper assets around the world. Initially, their focus was Peru and DRC, where we saw most of their activity. However, now we're seeing that they're diversifying in terms of location, and you can see that here in the map. And it seems that it could be a relevant player, or will be something that will be around financing a project acquisition. We'll start seeing China's involvement. There are around 19 projects we have identified between greenfield and brownfield that could produce up to 1.1 million tons by 2025, which are Chinese investments. Namely, Zijin could produce up to half of this by 2025 through their investments in Kamoa and Timok. Those are the most known projects. And Zijin has been the most active investor in the short term. However, this is a trend that will continue to happen. We'll see what impact it will have particularly in financing in the coming years for copper. And last but not least, another topic is being quite, let's say, trendy in the copper space or in every space is ESG, and particularly the increasing pressure to reduce CO2 emissions, right? So even though ESG should take into account environment, social, governance, most of the discussion has been nowadays around the environmental aspect, and and specifically here, CO2 emissions. For copper is quite important because, as we were seeing before, the EVs, renewables, and the green transition is a key driver for copper. So at the same time, copper should be accountable for being part of that transformation. So if we think that the copper industry would like to decrease 50% carbon reduction by 2030, this means that there will be 1 ton of CO2 per ton of copper. And as you see here in the graph on the left, in this emissions curve, this is for 2020 for the copper industry. The average is a bit over 4 tons of CO2 per tons of copper produced. And obviously there is a wide range of, this is by country, by the way. So you can intuitively think that that's Chile. And obviously there's a wide difference between operations. It will impact if it's through a concentration route, or if it's SXEW, because this also includes scope 3 emissions related to smelting and refining. So that's why concentrates route, obviously it has a higher impact because we're comparing cathode to cathode. But long story short, this will mean that the equivalence of what it needs to be reduced means that all of Chile's copper consumption in terms of power, 70% should come from renewables if you want to achieve that number. Other way of seeing it, it would require over $3 billion investments in electrification and open pit mines and improving with electric trucks and so on, or over $5 billion of additional capex to cover all of the different ESG compliances. So Obviously, it's desirable to get into a green scenario, decrease CO2 emissions. However, this will have an impact in projects. And we'll probably have a discussion on this as well, in how's this impacting in financing, and also how can impact the profitability of projects, particularly if more OPEX and more CAPEX are required in order to reduce emissions. So I don't want to take more of these of the time. I think the most interesting part will be to have the discussion with the panel. But just a quick summary and where are we and moving forward. So maybe an aspect that I didn't touch much on the presentation is that in terms of copper demand, we talk about the rapid recovery in China. However, the rest of the world didn't see that fast of a recovery, and we estimate that there is copper consumption that was permanently lost. However, China particularly have gone back to industrial production levels, pre-COVID levels. China is rebalancing to limit future growth. So when you look at the China's 5-year plans and so on, you're not seeing as much of a traditional infrastructure expenditure as they used to have in the past, but now they're focusing growth in improving business, entrepreneurship, and so on. So it seems like maybe we will not have that huge demand spikes of copper in China on what it was the traditional infrastructure expenditure. But to make up for that, you have the EVs and renewables that will make the difference both in China and in the rest of the world. And the upside opportunity here it's relevant, particularly what will happen in the US and the ongoing subsidies and stimulus in Europe and China as well. So with all this in mind, we do see a supply gap that will become sizable by 2030, as we saw beforehand. So we'll need more projects to come at a firm level. We'll need more brownfield and green projects, and overall the world will need more copper. So depending how we achieve that, it will obviously have an impact in prices. Now, obviously, I can't show our price forecast in here. However, I want to say that around $3.9 per pound, it's sort of our average that we expect for 2021. However, we do see a correction starting the second half of the year, and it's going to sustain over next year, mainly because of the new production that will come online that I already discussed. There's still some risk associated to further disruptions associated to COVID from those new projects and operations. But we do see that trend. But as we move towards 2023, 2024, 2025, there should be sustained copper price increases associated to the new production, new projects that are going to be needed. And as summarized here, price will have to tend towards long-term incentive levels, which historically has been around the 19th percentile of the cost curve of the industry. So meaning that 90% of the guys will have to be making money, and we're going to need a price that sustains that. So having said that, this is my contact information just in case, and that was what I have prepared for today. And I think we can go now to the Q&A with the panel. And I think that's me. So that's me that I have to go with the Q&A with the panel. So Adam already did an introduction on the great panel we have today. So I wanted to separate the questions in 3 rounds. The first round being the copper cycle, what we have seen and where are we moving forward. And first of all, Marcelo, giving your experience with Antofagasta, with Codelco, with majors, and having experienced different cycles in the past, do you think that we should see a shift on the strategy that the majors are taking? Namely because on the last years, with depressed copper prices, we saw that the main focus was decreasing the cost, moving away from exploration. How do you see now things moving forward? How will majors going to react in this potential new bullish market?
Well, I have seen the majors on a wait and see mode in the last 12 months. And taking all possible measures to keep the cost down while the copper price continues increasing. I have also noticed that they are updating a number of expansion studies that they put in a box the last 4 to 5 years. And as the fundamental get stronger, I believe the majors and mid-sized producers will start launching mainly brownfield projects, such as expansion or switching from oxide layer to sulfide plant, which require important investment. I would like to add that in Chile, most of the projects, as Francisco well said, are brownfield, switching from oxide into the sulfide layer. Some analysts are taking this switching as also a new brownfield project. Why? Because it's a completely new plant, although there are a number of infrastructure of the complex already in place. They have to switch from an oxide plant into a complete concentration and flotation plant plus grinding mill, which is minimum $3 billion in capex, depending on the size of the project. On the other hand, the world has not seen the discovery of any new important big greenfield project, such as Escondida or Chuquicais, in the last 10 years. And most of the new exploration target portfolios in the world shows a production lower than 250,000 tons per year. And as I speak, there are fewer and the majority with low ore grade. To summarize, Francisco, your question, this is the right time that the majors get aggressive on developing new projects to meet the expected forecast demand from the electric vehicles. And one important topic that we have to take into account is the decarbonization. This is high on the agenda of most of the companies across the world, the decarbonization roadmap, where copper, fortunately, is the key metal for decarbonization and for EV metal. That's why I'm very positive on the next 3 to 5 years for the copper demand and copper price. Thank you.
Perfect. Thanks, Marcelo, on that. And just very quickly on the majors strategy, what's your take on M&A activity from majors? Maybe some consolidation in the space, or maybe majors are going to be more aggressive, looking to acquire smaller companies. We saw in the past some investment, for example, I'm thinking on BHP and Newcrest in SolGold, investing in that company just to get exposure to their Cascabel project in Ecuador, and things of the sort. Any comments on the potential M&A activity from copper majors?
I must say that I have been puzzled. I haven't seen important M&A in the last 2 or 3 years in the copper market, especially at the beginning of the pandemic, that some companies' market cap went down to 2-3 folds. So I would have expected M&A, but I think the world and most of the copper producers were very scared how long will this pandemic last, and they didn't want to take any risk at all. And they just managed to comply with all the sanitary protocols in order to keep their production going. Having said that, we should see a number of M&A, because this market, capex is getting very high, and you know that the economy of scale and synergies in the copper operation are very important. So my inclination is that we'll see a number of M&A coming up. I would say not major with another major, but perhaps a major acquiring or bringing into their balance sheet a medium-sized company that could fit to their synergies and to their culture. Mm-hmm.
Okay, perfect. No, thanks for that, Marcelo. And quite interesting to see we look forward to see what could happen there. Definitely, we are entering into a dynamic market. And to take your point on the greenfield projects, I want to move now to Luis, because navigating through a downturn, as we saw in the last maybe 5 years, is particularly harsh for a junior explorer. Marimaca saw a transformation in the last couple of years, focusing now in its flagship project, being in Chile for a number of years and in the copper space. So the question to you, Luis, is how was in this downturn copper cycle survival for a junior explorer, and how this transition happened to, let's say, rediscovering Marimaca, and now that we are sort of changing into a new copper cycle, what do you see is the key challenges, or how is the strategy now moving forward for you guys?
Yeah, thanks, Francisco. Good morning to all my colleagues in the panel. It's a pleasure to be here to share my thoughts and information about our project, Marimaca. So I think before we get into the, let's say, the rediscovery of Marimaca, as we announced some time ago that had become the focus of our company, let me tell you about the discovery of Marimaca, which I think will set the scene for further discussions in the panel. So Marimaca, different from the previous or the current geological modeling status quo in Chile, is located in the Cordillera of the coast Cordillera of Chile. So it's not in the high Andes. It's an IOCG deposit. It's not a porphyry deposit. It's an oxide deposit. It's not sulfide deposit. And how we as a company managed to find it? Well, it's actually very close to two big centers, Mejillones and Antofagasta. So you can say that Marimaca is actually in the beaten path. And still, nobody had seen that before until we arrived there. There were no drilling done and so on. So I think one of the challenges that we took for ourselves was exactly to challenge the status quo of the geological setup. And what we realized that although being an IOCG hosted in an intrusive rock, most of the IOCGs are actually hosted by volcanic rocks, we're able to discover and to think the project differently and come up with you know the magnitude that it is right now. So that intrusive rock actually was extremely fractured, which allow for intrusive rock usually doesn't have a lot of permeability, but this fracture allow for the mineralization solutions to impregnate the rock and then creating the deposit. And again, lots of other companies and geologists have been through the place and couldn't find it. So to me, that tells me that although Chile being, you know, the top, let's say, the top location for finding new deposits, still, I think it proves that still, if you challenge the current geological modeling setup, you can actually find new greenfield projects, and that's a proof. I think Marimaca was a living proof of that. So in terms of challenge for a junior company, even in a very you know mining related country like Chile, obviously in a cycle that you are not in the super cycle, the juniors always struggle for capital, for money, for doing their work. In terms of our company, we're very fortunate to have an early on participation of a private equity fund out of London, which is Greenstone Resources, which also give all the support that we needed for all this downturn of the last super cycle, for us to have enough funds to develop the exploration, and that was it. I think junior companies will still and always struggle for money, but if you can have again a good story, you'll find the money for developing your project. Now we as I mentioned right in the beginning, we decided to focus on our flagship project. And before, the company was trying to develop early production at a lower scale. But as soon as we start realizing the full potential of the exploration of Marimaca, we decided to put our focus there. And in parallel, also to start some, let's call, de-risking activities, mostly dealing with technical issues that later on will prove to be, you know, a fast track for developing the project. Now I'm talking about doing a lot of metallurgical testing on the ore and things like that. So I think having this joint plan of focusing exploration, but also not forgetting to start to de-risk your project early on in that stage will provide you know, a clear path for developing the project. Great,
thanks for that, Luis, and giving us a little bit more insight on Marimaca and the discovery of it. And actually, one of the points you made, it goes perfect with the next question that I had prepared for another of our panelists in relation to the anchor private equity financiers that supported Marimaca from the start. So that will take me to Francesco, and from the going into what Luis was mentioning. So we saw in the last years, in the downturn of the copper market and commodities market as a whole, that private equity is starting to gain more and more relevance in financing for both, not only for construction projects, but also in earlier stage projects. The case of RCF even introduced an opportunity fund that, to my understanding, it was aiming to participate in riskier and exploration stage investments. So the question then for you is, in all this market, how it's evolving, how do you see the appetite of private equity and the role of private equity in mining and exploration? If it's going to remain a key focus, do you think are going to, well, I don't want to say you guys, but the private equity world is going to continue being a relevant part of the financing scene?
Well, hi everyone. Thanks for the question, Francisco. Well, to your first question, we will be here. We will continue supporting projects. Now, private equity, it's interesting. I mean, we started the private equity for the mining space. We've only been dedicated to the mining industry, and the opportunities fund more than being sort of to provide sort of exposure to riskier investments. The purpose was to dedicate and be focused on earlier phases of investment, but also to take advantage on certain specific opportunities. I mean, we tend to fund, you know, across the stages of development, but also across commodities. So, you know, we don't just do copper. Now, we believe the private equity as a source of funding is a good source of funding because it's a long-term source of funding. So, you know, similar to the case of Marimaca, you know, we take a long-term view, and by taking a long-term view, that means that we are available when, for example, the capital markets are not. So I suspect this is part of the nature of the mining industry, and I don't see it changing in the foreseeable future.
Okay, perfect. Thanks for that, Francesco. And yeah, interesting point there in how private equity gains more relevance as capital markets are absent, and probably we'll start seeing a shift in that in the market, but still yet to be seen. Now I want to turn into, let's say, the second round of questions. Now, looking more a little bit on the copper supply gap that I sort of mentioned, and it came also in the discussion with Marcelo and Luis. So I want to start with you, Marcelo, and you touched on this a little bit previously, but existing operations are getting more and more complex, more expensive. And as you mentioned, expansions now is not only increasing the mine plan, right? Now it's changing completely on the mining side from moving, let's say, to underground block caves or changing the processes. There's the issue of water scarcity and etc. So do you see a potential risk for existing mine operations to reach the respected production targets in the future?
The answer is yes. The existing operations are really getting deeper, the rock harder, and the grade lower, coupled with demanding new regulation and environmental from the community, and also, community requirements. All this is challenging the yearly mining plan and cash costs. That's why some mines are already facing lower production. There are solutions to come back at full production at a cost, and sometimes the investment is not economically viable. So the trend is to wait for a high copper cycle to implement a higher investment that can overcome the challenges, and in the meantime, to manage a marginal output increase to improve the overall economics of the projects. I believe that this is the right time because copper demand outlook continues to remain strong on firm expectation of a global economic recovery, which it could be even stronger in the second half of this year and also the first half of next year. So I agree with your question. Most of the producers, especially medium size, are really struggling to meet the mining plan this year, and they had also the same issue last year. So they have a number of challenges to overcome in order to meet the mining plan, and to do so, most likely they will need to bring a new investment, and that investment should take place during this high cycle. That's why I am confident that they will start doing this and thinking on a new project pretty soon.
Okay, perfect. No, thanks for that, Marcelo. And actually, that sort of exacerbates the idea that this supply gap that could happen. And we saw it with COVID restrictions as well, how they have to change all the mine plans, and maybe we are still yet to see the impact of the changes they did in the operational plans because of COVID, basically. So you had to delay mine extraction and so on, and that probably will have an impact in a couple of years. So very quickly on that, Marcelo, maybe if you can explain a little bit on some people have been saying that a lot of high grading was done in some operations in order to during the pandemic being able to produce with less people, basically, and delaying mine expansions and so on. And any take on that? And do you saw that as an actual trend, and what impact could it have in the next couple of years?
I will say yes. As an example, the Chilean producer, they said at the very beginning of the pandemic, when they had to take all these sanitary protocols, that they were going to do their best to keep to comply with the mining plan of 2020. However, that they knew that they were going to do it for the first 6 months, if it was lasting maximum 9 months, but after that they were going to face an increase on cost. Why? Because they were delayed. As you well said, they were high grading, so they moved from low grade section of the mine to high grade section of the mine, and they also delayed because they were working with 60-70% of the total staff, so they delayed the removal of waste. So this year they are facing mainly removal of waste and that may have an impact on the total output that they have programmed for this year. And it's also an increase on cost. So I agree with you that this year, the supply side from Chile, I think, is going to be slightly lower than last year. And the cost may go up due to the need to remove waste that they didn't do last year.
Great. No, thanks for that insight, and very well explained as well. And thanks for that, Marcelo. So that takes me now, Luis, going again, talking about supply, and we said already that Chile is mostly a brownfield story. As one of the few greenfield projects, and taking into consideration all these potential supply constraints, do you see a competitive advantage in moving forward and taking a project into production to fill that gap, taking into account the issues that some of the expansions and majors are having? And will this good copper market help that process? And maybe will be a race to get there. How do you see that?
Yeah, no, definitely, Francisco. Look, for me, the main drivers for a company, any company, to approve any project, either greenfield or brownfield, remains the capital risk appetite. In other words, the risk associated to any potential overruns, and also, of course, the execution risk, the technical, the permitting, timing, and so on and so forth. So in case of Marimaca, I think our one of the best competitive advantage that we have is the location of Marimaca. So in Marimaca, we are close to Mejillones, where all the needed infrastructure that we have for developing the project is there. So I'm talking about people. We are close to Mejillones, Antofagasta. Water, in our case, we're going to be using seawater for the heap leaching operation. In terms of power, we are very close to the heart of the Chile national grid in the northern part of the country. And of course, the logistics, we are close to the port of Mejillones, surrounded by highways. So it's a dream for any project developer to be. Obviously, that brings a lot of advantage for us. Indeed, we capture that those advantages in an engineering study that we issued last year, a PEA, which show very low amount of capex, sub $300 million, and as a result, also, because it's a heap leach operation, open pit, we are going to have also the OPEX. The numbers of capex, OPEX are clearly in the bottom side of the cost curves for any project. So I think, regardless that it's a greenfield, I think because of the project setup, it's going to be an easier project to be developed. And finally, we're talking about a copper oxide deposit. So we will be able to produce at a peak 40,000 tons of copper per year for 12 years. And intrinsically, when you are in a heap leach operation, an oxide deposit, all these risks that I mentioned before, compared to another project that is sulfide copper related, of course, we are going to have a lot of advantage. So definitely, I think we are well positioned.
Thanks for that, Luis. Now, Francesco, continuing on this topic, and we mentioned beforehand that obviously copper is getting a lot of attention because of the impact on electrification and so on, and we see this supply gap that will exacerbate the need for new projects. So in this sense, do you see an increase in activity in terms of funds and capital flowing to get more exposure to copper? Maybe money that beforehand didn't even thought in copper as an investment opportunity, and how this will impact and what will be the competitive environment for financing copper projects in the next years?
Yes. So I think one point that is worth mentioning is copper has had strong fundamentals, since the past 7-10 years. It's been a preferred metal It has very strong fundamentals. Those fundamentals remain there. Now that wasn't reflected in the past few years because of the copper price. Now the copper price has spiked. All of a sudden, we're all awake and say, wow, this is finally arrived. And that, of course, has brought attention from all the sources of financing. So yes, we have seen more flows into the copper space. Now, we still haven't seen many projects being funded by sort of alternative sources of capital. So not by the majors, but we do expect to see that happening. And it doesn't necessarily it hasn't been because the industry was not in favor of copper. It's just because it's not so easy to find a good copper project. Private equity, because of the nature of private equity, being disciplined capital, doesn't like overruns, and it also, in terms of capacity, can also do up to a certain point. So once you have these big porphyry copper projects, it's very hard for a private equity fund to get them into production.
Okay, perfect. Thanks for that, Francesco. Now moving into round 3, and I wanted to just touch here a little bit on some relevant topics, and particularly a lot on ESG consideration. As you're all aware, and it sort of came up in the discussion, it is and will continue to be a relevant topic. So Luis, to start with you this time for this round, the 2 questions actually in one. In one hand, and I sort of mentioned in the presentation, is that obviously in relation to emissions, it's desirable to have, let's say, electric trucks and to have renewables energy and so on. That, however, is desirable, but will come up at a cost, both in OPEX and CAPEX. So overall, how do you see this impacting project profitability? You did mention that you are evaluating use of seawater, for instance, and so on. So how these new requirements are going to have an impact or not, you think, in cost and CAPEX? And the second question is related to traceability, which is also being a major issue, maybe not as much for copper as of other commodities, but it's becoming more and more relevant. And you did mention you are having an SXEW operation, so you're going to be producing cathodes which are completely traceable. Do you see any upside in that, any trend in that consideration?
Yeah, definitely. Again, having an SX electrowinning operation is so much easier than producing copper concentrate, as you may imagine. So in Marimaca, as we are developing the project, the concept, we are very aware of ESG features. So as you mentioned, starting with the seawater, and on top of that, seawater is actually helping us in the recovery side. We know that, for instance, when you have more chlorine into the process, you can have more recovery. And most important fact for us also is that that seawater that you're going to be using, the source of it is already permitted, because we have a number of providers in the area that have already got the permit for extracting water from the sea that we can use. So we're not going to be creating an additional impact of permitting more seawater for the project. That's very, very important. And of course, being a kind of an oxide deposit and being able to extract the copper by heap leaching, in terms of water consumption, this is going to be like almost 5 times less water tons or cubic meters per ton of ore processed than if you were to produce by flotation, which then you would require more water. And third point is the footprint of the project as well. If you are doing heap leaching, you are not having to build a tailings dam. So the footprint of the project is going to be reduced, and that has a significant reduction in the environmental impact that you can have. And the list goes on. I think obviously we are in the Atacama Desert, a region that is known for being one of the best places for renewable energies such as solar and wind power. And in fact, nowadays, when you start talking to the generators in Chile, they already add in their power matrix that they are offering you a portion of the renewable energy that you would like to have. And we are targeting to have as much as we can. If we can have 100% renewable, that's what we want to do. So I think that all adds up, to we can say that Marimaca is going to be really a green copper operation, literally, because we also have our copper oxides in green minerals. So I think we're well positioned.
Hey, thanks for that, Luis, and to give us some more detail about the actual processing route and more technical aspect on the project. Marcelo, to continue on the environmental topic, and we sort of touched on this maybe a little bit beforehand. So we know that water scarcity is an issue, is critical, but beyond that, that has an impact, not only the use of fresh water, but also tailing management, and that is changing a little bit the scope of all the mineral processing for different operations. And overall, as you mentioned before, it's getting deeper, lower grade, harder ore. So with all of that, in overall, we're seeing a larger and larger footprint of environmental footprint, if you want to call it, of operations and projects. Now, it seems that in the past, the norm for majors has been the bigger, the better, because of economies of scale. However, do you think that all these environmental aspects and capital constraints, we're going to start seeing more medium-sized projects with a smaller footprint rather than mega projects, or maybe even majors are going to start looking at medium-sized projects? How do you see that as a potential trend, maybe?
Mm-hmm. It's really not easy to answer, because medium-sized projects will certainly reduce the footprint on three main invasive areas, such as consumption of water, including the pipeline and the pumping stations. Altogether are really invasive on the land side, and also the tailing dams and environmental topics. All of them are really invasive compared with the big projects. In copper mining, the economy of scale is very important to make either low-grade or underground projects financially healthy. So the medium-sized projects are competitive only if they have either higher grade and other benefits, such as high byproduct credits, low elevation compared with the sea level, and close to a port facility. However, as we see new redefinition of mineral processing every day, I would not be surprised that in no distant future, medium and small projects may get more support and gain interest from authorities and communities due to the reduced footprint compared with big ones. So they will struggle. They will have a problem with to make it economically viable, the medium-sized projects, but with the new redefinition of processing, mineral processing, every day we will soon see new technology that will allow them to develop these projects. And I wouldn't be surprised, as I said, that authorities and communities will really put a lot of pressure to develop small and medium-sized projects rather than big projects, unless they are in a very isolated area. But those close to towns or communities nearby they will the big projects will face big issues.
Okay, perfect. No, well, thanks for that insight, and definitely ongoing risk. And it seems like it's not that easy to make a decision.
Yeah.
And quickly on that topic, so and take it to Chile as well, and the majors. Some years ago, we saw, for instance, Anglo American divesting Mantos Blanco or Manto Verde to Mantos Copper. We saw BHP that was publicly announcing selling process of Cerro Colorado. And also we are seeing some recent announcement, for instance, of Antofagasta saying that Antucoya, in case of the potential new legislation and royalties, might become uneconomical. So, long story short, again, major companies, are they maybe continue the trend of divesting their sort of smaller assets, or in this idea of a smaller footprint is interesting? Maybe majors are going to stay around with the medium-sized operations. Any thoughts on that?
Yes, I think the major will mainly focus on the core business, and that's why we have seen in the past couple of years that they are divesting some areas that they used to be treated as core, such as, for instance, pumping of seawater, port facilities, even tailing dams. But now that everything is commoditized, and everything is run through a distant control office, they feel more comfort now to divest different areas of the operation, which used to be core business, as I said, such as pumping seawater, tailing dams, port facilities, and now they are ready to divest that. So they are catching out in order to focus and concentrate 100% on the core business and make it as more efficient as possible and with low cash cost. And this will allow them also to develop new projects or to expand the existing one. And, and based on your question, I think that they are ready to invest in medium-sized projects, mainly due to the footprint. There is a lot of pressure around that they are facing, so they are start seeing medium-sized project in order to reduce the footprint, but in turn to increase their production output.
Great. No, thanks for that. And actually, a really interesting point you brought up in terms of externalizing even infrastructure, like you're saying, port, electricity, pipelines, etc., to focus on the core business. Mm-hmm. So, just to connect very quickly, maybe with you, Francesco, on that I didn't think on that topic before, but it's actually very interesting. From an investor's perspective, I'm deviating a bit from the ESG thing, but from an investor's perspective, is private equity opportunity for infrastructure funding. It's something interesting around mining, both for a specific operation, existing infrastructure, maybe new infrastructure, maybe shared infrastructure. Have you guys looked at that, or what's your view on that?
Yes. So, I mean, for our CF at least, we are sort of mining focused, and we could invest in infrastructure for the mining industry, but we tend to see that there's other sources of capital that are sort of better suited from a return perspective in that industry. But we don't exclude ourselves to that, and we see it happening lots of times. There's plenty of projects where you can partner up with a private equity focused on infrastructure, So, for example, in iron ore, where infrastructure is a big part of the project. So yes, I mean, we do see a lot of private equity interested in infrastructure.
Okay, no, perfect. Thanks for that. And now to go back to the sort of ESG theme, maybe the last topic I wanted to touch with you is related to country risk, which obviously is being in something in mining for forever. As I presented initially in this panel, there's been an increase in Chinese investment around the world. It seems like they're a bit more risk takers, in the sense very active in Africa, for instance. And obviously we've seen new developments over there as well, with Kamoa particularly doing a lot of noise in the copper space, and the opportunities in Africa, which are perceived as risk countries. So what's your take on country risk? How do you look at investments in new jurisdictions? Do you think there might be a more competitive scene now that there's no Chinese involvement, for instance? Or maybe do you see more capital flowing into what was perceived as riskier countries? What's your take on that?
So country risk is a tricky topic. I mean, everyone sees country risk in a different way. So, you know, we, as in RCF, are country agnostic. Over the history of RCF, you know, we've funded or we've invested in over 50 different countries. You know, we tend to look at, you know, what everyone calls country risk. We dissect it and try to get to the bottom of it and really understand, what are you talking about? What risks are you facing? Is it, you know, communities? Is it, you know, tax regime instability? Is it expropriation risk? So we tend to really dissect the risk. And when you sort of dissect them, all of a sudden you realize, you know, there's certain investments in certain countries that, you know, if the right value proposition is there, you know, why not? At the moment, you know, we're invested in Burkina Faso, we're invested in Kazakhstan, we're invested in Guinea, you know, all countries that could well be perceived as high risk countries, but, you know, we've made investments there. So at the end of the day, we just dissect it a bit more and are agnostic. And this is the same for commodities. We've invested in over 30 different commodities, and it is just a matter of whether there's a good opportunity or not.
Okay, perfect. No, thanks for your insight on that. So I think we're running a bit of out of time, but maybe it's a good chance to maybe open the floor. If you guys have any questions or topics you want to brought in, or maybe something we missed that you think is relevant to mention, or otherwise, I leave it to Adam. Any thoughts, comments?
Francisco, may I say something on lithium? Because of course I am based in Chile, and I see, apart from copper, that it has overwhelmed the country for the last 40 or 50 years. We see now that lithium and green hydrogen are becoming very important metals or gas that can be developed here in Chile. And they are very connected with copper on the EV and on decarbonization. That's why I foresee that Chile is becoming extremely important on these three products in order to help the world to become more, to decarbonize the world and to make it more environmentally friendly.
Yeah, no, thanks for that, and absolutely right. And yeah, green hydrogen is something that at least in this part of the world has been getting a lot of momentum, and particularly mining can be sort of the anchor or the trampoline, if that's a word in English, for green hydrogen, in the sense that it might not be that feasible for light duty vehicles, because when comparing to lithium batteries, but for a specific application, let's say on a mine site, maybe you can optimize the infrastructure use, and it can be a solution for when it is harder to abate emissions right now for mining, which are the fuel consumption basically, and trucks. So yeah, no, definitely something that is getting more and more attention, and probably will have an impact in new projects.
Yep,
That's right.
I actually had a presentation with a gentleman earlier today who was from Toyota. He was there for 40 years in Japan and leading their fuel cell technology for hydrogen fuel cells. And it's interesting. That's obviously further ahead than electric vehicles, but it's certainly coming through as another cleaner transport technology as well. But of course, copper is going to tie it all together and connect all of the infrastructure and provide the renewables, the materials for the renewables that will provide the inputs to that. So it's interesting how these metals are going to be moving more in harmony, I think, as this energy transition accelerates to the next level.
That's right. Absolutely. Yeah.
And that's sort of the beauty of copper, right? That either if it's a lithium battery or a hydrogen fuel cell, you will need copper in both. So
that's right.
Or maybe I'm being too bullish. I don't know.
The three elements are becoming complementary now in the decarbonization of the world.
Certainly. Okay, unless anyone else has anything extra to add, I would say thank you very much to our panel. It's been very insightful, very comprehensive understanding of where we're at with some of the challenges for bringing copper supply online to meet this sensational demand. And Francisco, thanks for anchoring a great presentation. And to everyone else involved, Luis, Marcelo, and Francesco, thank you very much for your time.
Thank you. Thank you for the invitation.